What's up, guys? It's July 10th, 2025. Had a pretty interesting day on ES. It was a rally, but on Nasdaq, it was a pretty big sell-off. So there was some divergence today, which I didn't realize until later in the day. I want to give a quick shout out to all the members and subscribers. If you're interested in becoming a member, I go over trade breakdowns, entries, exits, where trap traders are, why I'm doing what I'm doing, and it's not only wins, I do post losses as well. So just a little more insight on how I find trades. So this is Nasdaq. There's a sell-off, and then I got a few legs down. I got trapped down here. I thought we could retest the lows, and then ended up getting stopped out. I think I got stopped out on this bar here. Then I got stopped out looking for a leg up here. I guess the correct stop would have been right around here, and that trade would have worked out. But it's all right. A couple losses today, not too big of a deal to me. I'm still trading the system, and I'm probably gonna go live by the time you're seeing this. I'm gonna be live for like an hour or two today, just to test it out, see how it's going. Because I want to start trading live again as my schedule clears up. I've got a trade right next to me that I'm trying to get into, but markets, man, I have not been able to get filled on a lot of trades, even last night. Trade I'm looking for is the second leg of these 3 bars. So I've got my limit order at the 50% mark, stop below the swing, and then my target's going to be the retest. So that's what I'll be doing live after this video posts for about an hour today, not too long, just to test it out. Then we'll see how it goes, and yeah. So you guys saw the divergence here. Big sell-off on Nasdaq, just a small sell-off on the E-mini. Ended up testing this point here, and then we rallied for the rest of the day. Training range behavior sold off right here. Weekly chart, daily chart. Bulls are trying to get follow through now. We have 4 bars in a row. We still have 1 day to go, so bears are going to have to do some work if they want this to close bearish. If not, bulls are definitely going for that all-time high. Well, we are at all-time highs. That's pretty cool to see. And that's just something I'm observing, an all-time high shouldn't be sacking you out. We trade price action, and bears are getting trapped here. It's not a short just because we're all-time highs. It's still a buy. Bears are getting trapped here. Bulls got trapped here. This is a big bull bar at the end of a trend. So if you're like, oh, we're all-time highs, we should keep rallying. But it's still a market cycle. We have a trading range at the open. We break out of that trading range with some very nice bars. These 3 bars breaks out. This bar starts a channel phase. Channel higher for the majority of the day, about 3-4 hours, and then at the end of the day it's a trading range. So all-time high is just an observation. It doesn't change price action in any way, shape, or form. If you tab back to a few videos ago, I was talking about how this is the first trendline break and it should be a better fade and a retest here, and it was. We have a big rally, 1, 2, 3, 4, 5, 6, 7, 8, 9 bull bars in a row. First trendline break is generally a better fade. This is what I built in one of my first systems around last year in Systems Academy under Brad's watch. It was buying first reversals and trading more than 3 bar breakouts. So there was a high chance that bulls are going to test the high before bears make 1R on this bar, and we can see that play out. Price action, again, it's fractal, so that means what works on one time frame will work on all time frames. What changes is our risk. So if you're looking to buy this, you use a 1R stop. So your stop's down here. The risk is obviously going to be a couple hundred points. Oh, 72 points is not a lot, to be honest with you. So it's about 72 points. Whereas here, you buy maybe we buy bar 37 for 1R. Let's see if it worked. Oh. By 37, so you're buying the bear bar, and look, you wouldn't get stopped out. 3 bars in a row, first pullback, and you make 1R. So there's a good example right there of how fractal price action works. This setup is very similar to this setup. The difference is this setup does have 3 legs in it, so leg 1 pullback, leg 2 pullback, leg 3, and that can be alarming. We'll see what happens tomorrow. The openings have had some sell-offs, but we've been rallying for the majority of the day, so that's good for the bulls. Where's bar 1? Bar 1's right here. So bar 1, bear bar, closing on this low, trying to get a second leg. Bar 2 is follow through. and then we can see a tail on bar 3. So bulls are buying the EMA. Bears that short the low of 1, 2, and 3. If you shorted the low of 1, there was about maybe 5 minutes you had to make money on bars 2 and 3. And if you were trapped, bears are going to short higher. So, oh wait, I did this wrong. Yeah, the bear that shorted bar 3 low, going to short higher. They're going to short around the bar 2, the bar 1 high. There's resistance right here, and they get out at break even. So that lets you know right away the opening's in a trading range, because yesterday we got a rally and now bears are making money. Bar 4 is follow through. We can see that there's tails on bar 4, and they're fairly big. So that tells me that bulls are getting filled. But there's also a tail to the downside. So bears are getting filled. So bulls and bears are both getting filled. Trading range behavior. Same situation with, what did I say? 4 or 5. Bar 6. Trading range behavior. It has a tail. Oh, let me delete this. It has a tail. So we know bulls are rallying. And this lets us know bulls are trapped. Let's say the first bull bought up here. He buys more at the bar 4 low. He gets out for a small point. Then some bulls bought bar 4 as it was moving up. They buy the bar 6. Some bulls bought bar 5 as it was moving up. The trap bulls buy more lower around bar 6, right around support to the left, right around here. And they make money on this tail right here. Let me get rid of these crosshairs. I think it's getting confusing. All right. That should be a little bit easier to see. And now we have bar 7. It's a bear bar closing on its low, but there's lots of overlap on the prior bars. So bulls are making money, bulls are making money, bulls are making money. Then we have a bar closing on its low. Bar 7 goes 1 tick past below bar 6, but it's a bad close and closes above it. We're starting to see support, and we know bulls have been buying, and they're able to scale out at break even or for a point or two. So it's not a strong bear trend. That's what I'm hinting at. Now we have a nice 3-bar rally, 8, 9, 10. Bears are trapped below bar 6 and 7. So the bears that shorted the bar 7 low is going to short higher. They short right around the bar 10 high. And look, bar 11 and 12, it sells off. Gives bears a chance to get out at break even and make some money. And then boom, bears know that we're in a bull regime above the higher time frame EMA. This may be the last chance to get out. They have to get out for a small loss or a couple points in profit. Bears buy the market. Bulls are buying the pullback from the 3-bar. Front running bulls bought bar 8 hoping for this breakout, and now they see it's worked. They know that there's a good chance for a second leg, so they're looking to add to their position. Bears that are trapped are buying back shorts, and then us second leg traders looking to join the party. We buy right around here. Maybe we buy the 13 high and we go for 1R. If you buy the 13 high, your 1R is going to be a little bit bigger, and that's acceptable. However you trade is good, as long as it revolves around the first principle as being breakouts and reversals. 12, 13, 14, 15, shot to get a second leg. Now this is where things get interesting for the bears, because bears were making some money here. They had an opportunity to make money on 12 if they averaged in from shorting here, and they make a small profit on the tail of 12. The problem is the bears that shorted bar 12 now, so the bears who shorted bar 12 as it was moving, they're short, and now they're really trapped. They never look at bar 11. Look at bar 13. Bar 13 never came down to break even, so they short more. Bar 14 never came down to break even, so they short more. And now they short more. And now finally, that's 3 times they've scaled in, and they still don't get their break even. A lot of bears are trapped there who are doubling and tripling their position. So that's bad for bears. They're buying back shorts at a greater loss than their original. That's why it's generally better I learned my lesson with averaging in. I think a couple months ago I blew out an account trying to average in I was short and I averaged into the shorts, and then exactly how I said it, I was like quadrupled my position and it just broke out against me. That's why if you're in a bad trade, it's just better to hit out or let your stop get hit. As long as you run a tight stop. If you run a 2-3R stop, don't let that stop get hit. So something to think about with stop placements. I like 1-to-1. So wherever my target is 1R. My stop's always 1R away from my entry. I said that kind of funny. I go for 1R stops and 1R targets. Bar 16, was that 15, 16? First reversal after 3 bars breaking out above the opening range. So this is the range. Where are the fibs? I don't know. Where are the fibs going? And look at where the market started to sell off. So the traders who play like opening range breakouts, they see 15 and 16, they buy it and they go for 1R right around here. Good trade for the bulls. You know, they make 1R, sells right off into the EMA. Let me delete this real quick. Bears are now getting trapped. They're shorting the high of 17. They're shorting 18. Look at what happens when we, so right here's the breakout, and look what happens when we enter the channel phase. Bears can short 18 low, they can short the 20 high, and they can get out for break even. Some bears might be able to make a point, but the majority of them are just going to get out break even or hold on to a loss. So that's the difference between channel phase, is that there's two-sided trading. The breakout's one-sided trading, trapping traders. Channel phase shows two-sided trading, and then trading phase is where both sides can make money. 1 second, guys. I'm just adjusting this entry. It's starting to get away from me. I have to reduce my position because it's getting too big. It's actually right at my mark. $100 is my risk, my max risk per trade. So, yeah, bears are getting trapped. Now some bears short 21 low. They have, and if they act quick, they can short the 22 high and get out quickly on 23. Bears buy back shorts, and that causes the second leg up. 22, 23, and 24, 3 bars in a row. Bears are trapped at 23 low. They short more. Look at 26. It rallies right above the 50% mark. So bears know that bulls are getting stronger because they're getting out quicker. They made some money down here. They were trapped here. Got out some profits here and here. It didn't trade below the 50% mark. So they know that it's better to just get out quickly. Offered a quick scalp, and now that makes 3 legs higher. Breakout, leg 1, pull back. Actually, we're going to say 18 is the pullback. That's the first trend line break. Leg 1, pull back. Leg 2, pull back. Leg 3, pull back. Leg 4, no trend line break. So there was a pause bar. The fourth leg was made up of 2 legs. Leg 1, pull back. Leg 2. And we sell off. Bears get 2 legs down, 29 through 30. The bulls that get trapped on 28 high, so they buy up here, far away from the EMA. Maybe they buy more around the EMA. They sit through some, you know, you actually could get out, maybe break even or a small loss up here if you're a bull. But if not, they average in, they buy some up here, they buy some up here, and very quickly, look what happened at the 50% mark. There was a sharp sell-off. So some bulls got out break even, some bulls just held on because they understood the context. They just had a bad entry. So bears get their second leg, bulls are scaling in because they're trapped at highs, and it starts to rally again. Excuse me, I had something stuck in my throat. 3 bars, 34, 35, and 36. Bears are trapped down here. They're going to scale in to avoid a loss. They maybe scale at 36 high, 37 high, and they get out at break even or around the EMA, and that causes the second leg up. 29 or 30, 38, and 39. So you guys are trying to see how trap traders help fuel the market. I try to do these breakdowns around trap traders because it's becoming more and more apparent to me that there's a reason to buy and sell every bar. So we need to exploit when there's a reason to only do one thing. So then that reason is when there's a trap trader. And you could argue there's trap traders on every bar. And there is, because there's always people buying and selling every bar. But we trade the 5 minutes, so that's what we'll stay focused on. Rally here, 42. Bears might think this is a wedge top, something of this nature. 3 pushes up, so they short the low, 42, and then they're trapped very quickly, 43. Look, we put the high 43, it doesn't really come back to 50%. Put the fib high at 45, and it does come back to 50%. So there's your leg 1 pullback, and then the leg 2 is met. The leg 2 minimum is met, 46, 47. Same. Now we're getting kind of climactic because we've had 3 legs. We have 1 leg here broken up into 3 legs. Now we have another leg here broken up into several legs. Leg 1, pull back leg 2, pull back leg 3. But then the bulls go for 2 more legs. I think it's harder to trade these last 2 legs because we've been rallying for quite some time. $48 low. Bears short this. Actually, it'd be like that. Bears short this. They short the 52 high. They have some time to get out, break even. That causes a big surge up, and then bar 53 becomes climactic. And there are gaps again. I gotta get going on that gap indicator. I keep talking about it, but I got a lot of things on my plate between yeah, I'm trying to get ready for Trade with Me. I'm wrapping up Randy Howe's psychology class, and I want to do his private mentoring as well. So I've been really focused on that, and then doing some more membership videos on the weekends because I do like doing trade breakdowns. So there are gaps here. Sometimes I talk about them, sometimes I don't, but I do pay attention to them. Gaps are just another way to see where traders are trapped. They happen at support and resistance. Look where these gaps are lining up, right around the swing here, right around the swing here. And that's limit order traders are getting trapped. The gap right here, bulls are trying to short the middle of the high part of this bar, but they get trapped. And then we went over how they average in. We have another gap. When we have a big gap at the end of the third leg, so here, this isn't that big, it's kind of the same. But if you have a big gap that lines up with the third leg, it could be a climactic gap. It might be a better fade. So that was just a quick, I just didn't want you guys to think I'm ignoring gaps. I pay attention to them all the time. How many bars is this? About 6-7 bars ish, 7 bear bars. Bulls about the high here, bought the low here. They get out at 50%. Unlike here, where there's a lot of conviction that we're going to go higher, so bulls could have held, or they could have got out right around here, but they didn't really lose money. Look what happened here. Instead, bulls see that bears have now officially made, the bears made money here, but then we went for another rally, a new high. Now bulls have seen bears made money again. That's 2 times bears have made money. We're officially, like, bears don't make money in a bull trend. So bulls get out at 50%, sells off, and there's a second leg down, 71 and 72. Climactic leg down for the bears. Traders' behavior to buy vacuum down. If you want to, okay, so we could just do this one real quick. Bears short the 72 high. Excuse me, bears short the 72 low, short the 72 high. And instead of holding on to break even, they make money, and they see that 76 becomes a breakout. So the bears that were now trapped are now pressing their position on 77. Do the opposite. Bulls that buy the high of 77, or excuse me, bulls that buy the high of 75. But look, it never comes back to 50%, so they're forced to hit out of a losing trade, and then boom, you get that flush down, 77. So hope you guys had a good one. Hope you guys did all right. I had a couple losing trades today. It is what it is. I'm probably going to be live within the next hour, just for a short time. I'm just going to test everything out, make sure it's still working. Hope you guys had a good one. If you learned something, share, show, don't be a hoe, and I'll talk to you guys later. Thank you for your time. Bye.